Hello and welcome. Today we've got this very special interaction planned for you all with Temasek India Head Ravi Lambah on how they are analyzing the investing landscape here in India. Ravi, thank you so much for taking time out for us today. Hope things are nice and safe at your end.
Thank you. Pleasure to be here.
Great. Ravi, let's start by understanding your broad observation on the kind of phase Indian economy is passing through right now. We all know where we stand right now in terms of tackling of the pandemic is concerned. But what are the signs you're reading on the shape of recovery which is underway as far as India is concerned?
Sure. I mean, this is obviously an unprecedented time for all of us. This is a once in a 100-year pandemic that we're witnessing. And India, like the rest of the world, has been severely impacted by the pandemic. It is, companies have been impacted, people, communities, economy. There's a lot of struggle all around. And there is still uncertainty because, the crisis here is still with us. The pandemic has not passed. It continues to, create roadblocks and hurdles for life to get back to normal. So there's clearly an impact on life in general, on economy. We've seen GDP growth in the first quarter was down almost 24%, and the forecast for the rest of the year is also muted, down from what happened in the previous fiscal year, and we will see the impact of that across many different parts of the economy. So like many other economies, India also implemented a lockdown, and there's been a consequence that was obviously the economic consequence of that was a slowdown in growth. Now we have to look forward and see, as we're seeing the last few months, while still seeing several sectors continue to be quite severely impacted. There are some leading indicators that are suggesting that there is a bit of a resurgence in the manufacturing PMI, which was I think around 52, GST collections that are up, etc. So slowly things are coming back, but until there's a cure or the virus is clearly behind us, we will have to find a way to get life back and businesses back on stream, and that will be a journey until we have a cure of some sort.
Right. Ravi, talk to us about what kind of conversations are you having with companies around, not only your investee companies, but corporates in general. How are they tackling these bad times? What kind of oxygen are they building in? Should they have difficulty in driving revenues 12, 18 months far out? Because the news on ground continues to worsen, be it, a smaller company called Smash, which shut down yesterday, global company Revlon, leverage is playing a havoc on balance sheets of companies. What are you gathering in terms of feedback from corporates you are in touch with?
Sure, I think it's a great question. And look, we spent the last 6 months primarily looking very, very closely at our portfolio companies and trying to see how we can take care of them. We spend time in the ones that have been, directly affected, whether positively or negatively. We've spent some time to figure out how COVID impacts the business today, what they need to do to try and survive the crisis where there's a negative impact, and as they come out of the crisis, how can they be stronger? So that's what we've been intensely focused on in the last 6 months. And I think what the read from the ground from our companies is that there are positives too. So, for example, on the positive side, companies where we have an all online business where, we're clearly delivering to home, whether it's food or whether it's, through Zomato, which is one of our portfolio companies, whether it's, medicines through our investment in PharmEasy. Those businesses are doing, or it's our media investments. Those businesses are able to go through the crisis with growth because they're seeing consumption behavior shifting towards that model. And then there are businesses where, the traditional businesses, where there has obviously been a slowdown. And those businesses need to, I guess, to the extent that there's balance sheet pressure, they need to raise equity, or they need to term out their loans and debts. And clearly the Reserve Bank, providing monetary assistance has been supplemental and has been good for companies. We have to see how these companies can ride through the crisis. More importantly, it's very important to ascertain how long they will be able to continue at status quo, and then what more needs to be done. So that's what we're spending a lot of time to figure out. Let's think about the crisis. Initially, there was a view that this would be shorter than what it is today. Today, it seems like it's going to go on longer. So now the discussion is, if it goes on for, let's say, double the time that we have initially thought, what does it take for you to fix your business, fix the cost structure, fix the product and the services so that you can survive and come out stronger.
Right, fair point. In fact, one of the unique things about this crisis is that it's not universally hitting all sectors with the same proportion. In fact, it's turned out to be providing tailwinds to many sectors. And we would talk about some of your companies and sectors you have interest in just a moment. But a word on someone who also represents the private equity community at large. How are they looking or analyzing the landscape? Is it one priority on the one side, the priority is to ensure that portfolio companies survive and topping up investments in them, possibly if required, or at the same time, because valuations are getting crunched, there are some great opportunities arising in the form of new investments as well. Purely from a professional who really represent the PE space, scan the size of opportunities or landscape of opportunities for us.
Sure. I mean, look, the pandemic has clearly had an impact on private equity deal flow and investments. In terms of new investments, clearly it has had a bigger impact. And I think whilst we obviously continue to seek out opportunities to put capital to work, we will see a slowdown in deal flow. It's not investor specific; it's across the board. And clearly, as I said before, we as investors have to have a more cautious approach as we go into this period of time. It is too soon to know what the long-term impact of the crisis will be on the private equity market. I think we're still early in that phase. But what I would say to you is that we need to learn from what we're seeing today, and we need to think about in the long run how do we emerge such that we can offset the losses that were made during this time. And I think that is your point about focusing on the portfolio. Now, when it comes to new opportunities, we have to figure out what does the post-COVID world look like, and in the post-COVID world, what businesses will be able to go through, their execution, what execution challenges they will have, what issues they need to deal with, and how they need to reposition themselves. Because a lot of business needs to repivot and figure out what the post-COVID world will look like. And frankly, we've never been there before. So a lot of our businesses and we ourselves are learning. So what does that do to private equity activity? I think it slows it down. It becomes harder to seek new investments because travel is restricted. So the ability to go meet companies and spend time with founders and management and try and understand, how they're thinking about the business, spending social time with them so you get to know them better, because it's always very important to know your partners. All of that is restricted right now. So as a consequence, you'll end up having a situation where a lot of the activity that we're seeing coming through is actually truly coming through what we already own. So there's a portfolio company, for example, which needs to, think about expanding because they've always wanted to, maybe merge with another competitor, or they try to make an acquisition, or they wanted to expand overseas. And as you say rightly, within a crisis, there's an opportunity in a crisis, and you got to think about what that means for you. So I think that is where a bulk of the effort will probably lie for private equity in the next 4 months also.
Let's move on, Ravi, and talk about your portfolio companies, your interest areas. And within that, financial services, especially Fintech, financial services backed by technology applications, is something which you understand very well. Within that space, if you could tell us what kind of trends are you observing? Be it the lenders, the private lenders is one part of it. Then technology-backed companies. In insurance space, insurance is something which you look at closely, and as also Temasek India has got a good interest in. Pine Labs is doing very well. Again, a transaction company, technology-led, which got a big tailwind because of what's happening due to COVID. Let's talk about this fintech piece first, as you see it.
Sure. So, let me address fintech, and I'll come back to the bigger question of financial services. If that's what you'd like in terms of sequencing. So in fintech, fintech has been an area of focus for us for quite some time. As you rightly said, we're invested in Pine Labs, we're invested in BillDesk. We also have an investment in Policy Bazaar. So just name a few. And I think these were businesses that we invested in based on a trend that we saw, which was all around, the world becoming more connected. There's a lot more activity online. There's a lot of digitization. And these are a few of our structural trends as we invest globally, not just in India. And these investments were made some years back and as a consequence of our belief that these are long-term structural trends which will play out in almost every economy. And I think when I think about what's happening in India, as you rightly said, the crisis has accelerated some of the growth that some of these businesses would have normally seen over a longer period of time, but some of that growth has got accelerated. And as you accelerate growth, as you get adoption of such businesses, generally what happens is it actually does land up changing behavior. And so when someone starts transacting online, if they find it convenient, they find it as a good experience, and they find it generally something that saves them, that's more effective and efficient, it's hard to go back. And I think that's really what's happening. When you think about food delivery, food delivery has been around for quite some time. Zomato, for example, one of our portfolio companies has been here for quite some time. And as you see, as the lockdown happened and people still needed to get food delivered, it benefited. Similarly, the payment side benefits because as payments move online and digital, the payment businesses start benefiting. So that's kind of what's happening on fintech. And I think if I zoom out and think about financial services, financial services, we've been invested in the banks in India, for example, since we started operating here almost 16 years ago, and banks continue to be a significant part of our investment exposure in India, and I expect it will stay the same. Same meaning it'll continue to be a significant part of our investment because banks truly represent a great proxy for economic growth. India, there's a view that IBEF has suggested that by 2028, India is expected to be the fourth largest private wealth market globally, and that's a pretty big total market to go after in terms of wealth management, and that will drive different aspects of growth. So when we think about financial services, we think about that aspect. We think about banks. You pointed out insurance. We've been invested in insurance companies since for several years now. We continue to be keen to expand our exposure in insurance because we believe that insurance, credit are just very early in their phase of penetration, especially when it comes to the digital and the online space. So I think long term, we are positive on financial services. We are positive on the digitization of financial services. Banks are transforming, and we certainly want to be part of that journey.
Ravi, just a follow-up word. Surely Policy Bazaar, SBI Life, is doing very well. But within financial services, the pocket of lenders, especially the Bandhan Bank, the AUs of the world, even access to a certain extent, don't you see this part of the portfolio or space see hiccups or challenges in terms of asset quality because of what's happening in the economy? Or you have factored that in because many of them are raised funds properly and perhaps will be providing for it and they'll be able to ride this rough patch?
Yeah, I think it'll be unfair for me to comment on any of our portfolio companies specifically. But what I will say to you is that as you think about the impact of COVID on not just on the banks or the financial services companies or the tech companies or healthcare services, it is a temporary impact. And from our perspective as Temasek, we are very focused on the long term. So when we look at these businesses, we look at our intrinsic value test. We see what the valuation should be today. And as you pointed out, we factor in what goes into the intrinsic value, and that is all about country risk. It's about market risk premium. It's all the good things that go into valuation, and we come up with a view, and then we take that view based on a 3 to 5 year or a 5+ year outlook, and on that basis we feel comfortable that currently our exposure. We feel comfortable with our exposure. We feel comfortable with what we own, and we think that over the 3 to 5 year period, structurally, the Indian economy will continue to grow, and these businesses that we are shareholders of, or which we will hopefully invest in the future, will benefit from that growth. So I think at the high level, we're comfortable with the exposure we have, and we look for opportunities to grow it.
Sure. No, I was just referring to those names. I was not really looking for you to comment on it. But anyways, let's move on and talk about the healthcare space. Again, this is a space, at least in the listed space, be it diagnostics or pharma companies, getting completely re-rated, in many ways, and some justifiably, perhaps some, are factoring in far out earnings now. How are you looking at this entire healthcare space, hospitals, diagnostics, and select pharma opportunities, like biosimilars, etc.? You look at it closely. Do you see we are coming out of a 4-5 years of weakish patch when nobody was ready to look at this space at all, and now people are recognizing the merits, or perhaps structurally things are looking improved?
Yeah, that's another good question, and it's very close to our heart because we have a strong focus on healthcare and life sciences. If I can build that together, in India, we've been invested in the hospitals here for quite a long time. Our first investment, almost 8 years ago, was in HCG out of Bangalore, an oncology chain, as you may know. And since then, we've put more capital to work. We have invested in Medanta. We're invested in Manipal. So these are some of our investments in healthcare services. At the same time, we were investing in pharmaceuticals too. We're invested in Intel Pharma for several or more than 6 years now. So these are long-term investments for us because we do think, again, I mentioned our trends before. This investment in healthcare life sciences fits very well with our other trend, which is longer lifespans. We do believe that the world and human beings will see longer lifespans, and that is a global trend that we're investing alongside. And when I think about India, you think about the fact that, the healthcare market here in India, again, IBF has some quotes. We have our own estimates, but IBF is saying this could be a 133 billion market in 2 years from now. And that's a pretty big market. And healthcare spend just by the government alone is being forecast by them to grow from 1.3%, which was in FY16, to about 1.6% in 2020, and it's going to be closer to what they're forecasting, they're closer to 2.5% of GDP by 2025. So you think about the healthcare spend by the government, you think about the need for healthcare services, and then you think about the sheer demand and the quality of healthcare services that you can take India to what I would call the development of this service to a much higher level, and there is a great demand for it. So we are behind this trend. We like it. We are investing in it. We have a healthcare services platform called Shares. Shares is looking to grow the exposure, in India and a few other countries like China. And I think we will continue to see the emergence of India, as you referred to, in the CDMO space. The contract development and manufacturing organizations that we see, and that's where a lot of scientific talent in India is spending time trying to create globally competitive companies through R&D efforts. So I think you hit the right point. These are trends we like, and we are looking to put more capital behind them.
Consumer. Let's talk about the consumer, which is badly hit right now. Disposable incomes are down, and the focus of any consumer, be it institutional consumer or even retail consumer, citizens, are focusing only on essentials. Whereas, the valuation in the listed space continue to remain sky high. What kind of chats are you having with your portfolio companies in consumer space? How are they going about reinventing or reshaping their business models? What's their own demand trend studies showing? How bad is the situation on ground? If you could share some insights.
I mean, domestic consumption has equally been the biggest driver for our investment activity in India. And domestic consumption has traditionally been around 60% of GDP. So we think this will, over the medium term and then to the long term, we remain very positive in this space on the trend of consumption and in the consumer space. I think you quite rightly said COVID has had a severe impact on some of these businesses and some of these industries, that discretionary spend has not come back. Non-discretionary, essential spend continues to be robust because people need to eat, people need to live, and that's what it is at right now. But at the same time, I think the stress in the system comes from a couple of things, right? Stress in the system comes if you have a balance sheet that needs help. If you don't have that situation and you can manage your cost base and you can ride through the crisis on what I would call a lower revenue pool, but you still are able to pay your expenses. And if you have a fundamentally good business, then when the crisis is over, you'll come out fine. If you don't have a strong balance sheet and you need to raise equity, some businesses have raised equity, so they then are able to ride through the crisis. So I think every business given how it was positioned before it came into the crisis, is reacting differently. And our whole objective as private equity, as owners of some of these businesses, is to work with them and figure out the best way that we can help them right through this crisis, whether it's consumer or whether it's any other industry. So I would not differentiate consumer from. I think what will happen is consumption spend in discretionary will take longer, but consumption spend in non-discretionary and the essentials will continue to be robust because of the points that I said before. So I would not necessarily go back and say this is going to be difficult. Yes, it'll be difficult for maybe a little longer, but then when it comes back, we think it comes back quite strong because long term, again, we feel very positive about where India is positioned. And again, consumer spend plays directly into many of our trends.
Right. Ravi, talking of great balance sheets, one name which catches my attention is Godrej Consumer Products, but I would not want you to react to it. I would want you to talk to me about what kind of opportunities are you witnessing in the agri space, especially the changes which the country is going through. A couple of years back, agri meant seed companies, tractor companies, perhaps certain microfinance lenders. But today, agri opportunity is widening. Government has taken some steps. Otherwise, too, there's a lot of buoyancy in rural India. Is that an area which interests you? Some businesses which are built around that. What are your thoughts there?
No, absolutely. This is an area of great interest for us too. Just like healthcare, we see a lot of potential in the space. And if I can talk about agri, I can talk about agri, and I would also like to talk about agri tech. And when we talk about agri and agri tech, we talk about not just agri, we talk about agri chemicals as well. We talk about the entire supply chain. And look, I think there are new and innovative technologies catalyzing a revolution, if I can call it that, in the agri-food supply chain and the value chain. I mean, COVID taught us one thing, and many things. It taught us many things. But one thing that did teach us was food security is very important as well. So I think there's a growing demand, and there's a lot of opportunities for investors like ourselves and at the startup level, for businesses and for governments to think about how we can transform global food systems. So this is not an investment conversation per se. This is a much bigger conversation, and India remains a very, very important market when it comes to our global agri focus. We see opportunities here to produce more. There's the opportunity to in a more sustainable manner, and sustainability is another very important focus for us in our portfolio. We can talk about that if you like. But on zooming into agri, I think as we've seen in the pharma sector, the chemistry skills that we see in India come to play in the agri chemicals export industry as well. So we're also investing in producers of animal-free proteins globally, like Impossible Foods and Perfect Day. We're basically providing more sustainable solutions for which sort of in the face of climate change, we need to see more and more of those models. Consumers too are becoming more eco-conscious, and that same trend is happening in India. So India is well positioned again. And we see a lot of potential for technological innovation across the entire value chain, not just for India's needs, but also for Asia and the global nutritional needs. So there's a distribution chain that needs more work. We're trying to think about that. The farm to fork and the logistics, that's part of delivering that in what I would call a sustainable way, the most efficient way, is an opportunity for capital to play, because capital can go in and then try and help build that entire chain and make it more productive. And therefore we see a lot of opportunities there as well. And if I can add, the agri sector itself is growing. There's estimates out there that despite COVID, we will still see a 3% growth in agricultural sectors, and this will continue to dominate a large part of the Indian economy for several years to come. So we feel that this is a space where we must spend more time. We have a few investments. We want to grow and invest more in this space in India.
Right. Ravi, I must agree with you that this entire agri opportunity, the entire supply chain, the range of products and services which can be built around it, it's a great opportunity, and we should have a longer discussion. It deserves much longer, wider discussion, perhaps someday. But right now, as somebody, on our channel a couple of days, Nilesh Shah of Kotak AMC did mention that the next set of Azim Premji, Shiv Nadars will actually come from the agrochemical and pharma space in India. That's the kind of opportunity perhaps it provides. So great to know that you are looking at it very closely as well. It was great chatting, Ravi. Thank you so much for your time. Great insights. Temasek always brings to the table. And we look forward to interacting with you often going forward. Thank you so much for your time today.
Thanks again, Ajay. Good talking to you. Take care. Bye-bye.